Good morning. Welcome to Stock Market Today. It's Thursday, November 19th, 2020. And this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. Let's dive right into it now. U.S. equities were lower in Wednesday's trading, with selling pressure increasing into the close of trading. For the day, rising COVID cases and the news that New York City schools are returning to remote learning outweighed recent vaccine optimism. Treasuries were little changed. The dollar was weaker on the yen, and sterling crosses flat versus the euro. Gold finished down 60 basis points. WTI crude settled up 90 basis points on the day. As we get to the desk this morning, a little bit of downside follow through. S&P futures down 10 basis points after Asian markets were mixed overnight, with China outperforming while Hong Kong lagged. European markets are weaker. Treasuries are unchanged to stronger at the long end of the curve. The dollar is higher on the major crosses. Gold is down 70 basis points. Crude oil is off 1% to kick us off on a Thursday morning. That starts out with the SPY testing the top end of the breakout range there, right? Putting the breakout to the test is what I'd like to call it. You kind of had those September highs, and we've been wrestling between there and the 360 level ever since for about the last kind of 8 days of trading. Downside, if we have to think about it, support is 340 and then 320 below that. Staying above those levels would keep the structure of the uptrend off the March lows intact. For the Qs, 260 is support. Move through 280 increases the odds that we see the September highs, but we are now consolidating here and continuing to consolidate, not now consolidating, we're continuing to consolidate within this range that's been in place since the beginning of September. IWM has support near 170, then near 160, still holding above those 2018 highs at that breakout level. For the day, and as it has been for the past few days of trading, all three funds are overbought based on that short-term overbought, oversold indicator that we use here at Chaikin Analytics. So the way I frame it up is what's the trend, and then where are we within that trend? So right now, I'd say the bigger picture trend is up. The shorter term trends are probably more in lines with the consolidation other than the IWM. And within that context, we are near term overbought. I think it makes sense when thinking about when to become aggressive on the long side of the portfolio to look for oversold conditions above key support levels, right? So oversold within the context of an uptrend, to me, is your sign to become more aggressive on the long side of the portfolio. That's kind of been the framework and the roadmap that we've been using here. And it, for the most part, as key support levels have held, that's been the right way to look at the world. So we'll continue to do that until the facts change. So that's the structure of the major market ETFs as we enter trading today. Let's hit our market in a minute. What are we writing about today? Well, late day selling on more COVID restrictions. So that, that's kind of what we saw into the end of the day yesterday. Breadth metrics support the bullish intermediate term trend. However, short-term measures did not confirm recent index highs. We'll talk about what that means a little bit later on. Gold miners have seen their ETF rating turn very bearish. And what we're going to do here today is highlight key support should a recent breakdown continue. And as I said, futures point to a lower open here today. Taking a look at the major indices now, based on power bars and their performance yesterday, the Dow lost 1.2%, 4-2 bulls to bears there. S&P 500 down a like amount, 129 to 51 bulls to bears there. NASDAQ was an outperformer on the day, still lower, just down less than the S&P, 15-13 bulls to bears. Small cap slight underperformer, 816 to 213 bulls to bears. Bonds uptick, sending yields lower. And according to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes across the board are mixed. Let's hit our stocks of the day. Wanted to run an interesting screen here. I've been doing a lot of screening work with the rotation playing out, looking for what is new leadership, right? We put a high importance on relative strength, and I think there are opportunities within the market when relative performance is getting better or has been persistently strong. We can kind of flip that logic on its head, especially when looking for what we call personality changes. So I ran a screen of the Russell 3000 for stocks that have a Chaikin power gauge rating that is neutral or lower. So, neutral down to very bearish. And then from there, I wanted to look for stocks whose relative strength turned weak this week, right? So they're kind of exhibiting that personality change, but in the other direction, to the downside. We want to identify bullish personality changes as potential long ideas, and at the same time, we want to be mindful of these bearish personality changes, as a potential source of funds, or if you do trade to the short side, if the setup is there. I think that this is a good list to use to potentially do more work. If you own any of these names, maybe considering why you own them, maybe considering what your risk management process looks like. As always, a screen is just a starting point. You need to kind of take it a step further. But what's interesting to me is, see a lot of the former leaders out of the turn, names like Cadence and Synopsys in the software space, Pool Corp, POOL, obviously a well-followed name, Chipotle, as well as Zoom, right? So being mindful of these shifts in the relative strength can help identify potential absolute trend changes sooner, or at the very least, kind of keep you out of the names that are lagging the overall market. So this is an interesting screen that we've run here today. Not an immediate call to action. I view these as, like I said, a screen as a starting point that warrants more attention and further analysis. So take a look at the screen that we've run here today. I have it featured in the note. If you'd like to take a screenshot of this and use it as a watch list, please feel free. Taking a look at the sector tracker now, movement over the last 5 days for the major sectors. Energy popping of late. We've talked about that, as are industrials. Industrials recently trading at a new all-time high. Financials have also seen some strength on the back of a continued steepening of the yield curve. Right, we've had a big move in a lot of these beaten down value areas of the market here in the near term. So definitely would not be surprised to see a little bit of backing and filling. Would likely be healthy, but the emerging trends so far look to be holding. Materials, real estate, and comms are middle of the road and higher over the past 5 days. And then the groups that are lower, staples, information technology, healthcare, and then the utilities. And then, as I pointed out yesterday, it's nice to see the utilities underperforming, right? People tend to look at the utilities, and if they begin to outperform, get a little jittery about the market, I think you need to take the analysis a step further. Right now, we have the two defensive or traditionally defensive areas of the market, staples and utilities, underperforming over the past 5 days. So let's move on to our industry in focus, semiconductor services, which has been a big outperformer over the past 6 months, leading the S&P 500 by over 27%. Power bar ratio, which looks at future potential, is very strong. We have 5 bulls for 1 bear. Ranks at number 9 of 21 subsectors, having moved down 1 slot over the past week. So some of the indicative names there that might warrant further attention: Smart Global, SGH, Qorvo, QRVO, and Cirrus Logic, CRUS, with very bullish, and bullish Chaikin power gauge ratings, respectively, and all 3 are holdings in XSD, the SPDR S&P Semiconductor ETF, which has a bullish ETF rating. 1 bullish stock, 5 bullish stocks, 1 bearish stock, strong trend above the rising long-term trend line after recently trading at a new high. Chaikin money flow solidly bullish. You can see the outperformance here. Now, diminishing a bit, but still a solid outperformer. Only issue I have here in the near term is, much like the broader market ETFs, SMH, XSD rather, is overbought in the near term. But we'll continue to watch the semiconductors. I use them as a barometer for market health, especially when we start to see a deterioration in the relative strength. Look at what happened back here in the January-February timeframe. Look at the big drop off in relative strength, and then turning lower right as the market was turning down and getting hit hard on the COVID news, right? Again, relative strength really started to diminish here before the market wobbled and the growth trade started to top out in September. So we're watching. Not any concern just yet, but obviously something we want to be extremely mindful of. Let's take a look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. Flowserve FLS up 3%. Nothing company specific to drive that. Likewise with Fleer, didn't see any company specific news to send that stock higher by nearly 3% on the day. JCI reacting positively to the release of October architecture billings. That stock higher by 2.8%. FTI was awarded $1 billion contract that sent that stock higher by over 2.5%. And CCI, some news relating to Dish Networks was received positively. That stock higher by about 2.6% on the day. On the loser side of the board, Lowe's reported earnings, stock lower by 8%. Norwegian Cruise Lines comes to market with an equity share offering, takes 7.25 out of that stock. PSX, didn't see anything company specific there. Maybe likewise with Valero, crude oil inventory numbers were out yesterday. Those stocks potentially impacted there, down 5.5 and 5.3% respectively. L Brands down 5% on further investigations into Les Wexner. However, after the close yesterday, they reported earnings and the stock is up solidly as of this morning. Let's take a look now at the breadth picture for the market. And what I would say is the intermediate and longer term breadth structures remain solid. The percentage of stocks above their 200-day moving average at about a 5-year high, really. 87% of stocks above their 200-day moving average in the S&P 500. That's solid breadth. Some might even argue a little somewhat extended here in the near term. Percentage of stocks above their 50-day moving average, likewise above 80%. We've kind of viewed 60% as a sign that healthy a majority of names are in long-term uptrends or intermediate term uptrends. Or, in my note, I look at some shorter term metrics as well. And the shorter term metrics are diverging a little bit here in the near term. When we look at the percentage of stocks above their 20-day moving average, it did not confirm the breakout in SPY. Right. So as S&P 500 as SPY traded at all-time highs, the percentage of stocks above their 20-day moving average made a lower high. Likewise, I look at the percentage of stocks at Chaikin Analytics in the S&P that have a bullish or better rating and kind of created an indicator out of that. And similarly, did not confirm the S&P when it traded at all-time highs. So the short term, right, kind of wrap that up with the fact that all of the major market ETFs are overbought and sentiment is a little frothy. You can kind of see scope for further choppy trading in the near term. But I think if you zoom out, the bigger picture, breadth metrics are constructive for the market. Here's the advanced decline line continuing to hold above the breakout level. And as we said last week, the advanced decline line tends to lead the S&P. So we had the breakout to new highs for the AD line. And then shortly thereafter, the S&P 500 did follow suit. Let's look at another way to kind of think about breadth is the equal weight S&P 500. The RSP is the ticker symbol on the ETF. And you can see that did break out as well, right? So when you kind of visualizing a rotation from large and mega cap down to mid and small cap, you can see it here because this is the average stock, right? It's not cap weighted, right? It's not overly influenced by the Apples and Amazons of the world. So the fact that that's breaking to new highs is constructive from a participation standpoint. RSI holding bullish ranges after failing to become oversold on recent pullbacks. And then look at the relative, right? The relative starting to round out. That relative line, if we zoomed out, has been declining since 2016. Now appears to be forming a base. So that, from a breadth perspective, as it relates to the trend, is another bullish data point. Finally, the gold miners potentially breaking down here in the near term. Broke through the 50-day moving average, now going to fight with the 200-day key support right here in the kind of 30 to 32 zone. This is a 5-year base. So you want to see that level hold. And if we look on a relative basis, we're starting to see some signs of a potential breakdown. So that'll wrap us up for a Thursday. Take us for a test drive. I will be back with you tomorrow. Have a great day, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.